This is the briefing for Thursday, September 21st. As I have said many times in these briefings, trading, or really should say not trading, but analyzing markets is a system of probability assessments where we assess the probability of one event occurring over the other, meaning either the market's going up or the market's going down. And we take all of the information we get from the market, we interpret that, and try to determine the higher probability of one event occurring over the other. Now, for quite some time, I should say for probably the last week to 2 weeks, I've been looking at the fact that potentially the stock indices are in a very bearish pattern. And I've discussed that in previous briefings, even as early as last night's briefing as well. Now, as we assess those probabilities, we always have to be aware that while there are no 100% probabilities, we have to understand there are smaller possibilities that could occur. So while I have felt the higher probability is that we're going to see a fairly dramatic move to the downside in the stock indices, there is always a smaller probability that that was wrong and that we were going to see a move back to the upside. What helps with that is analyzing each day the price development of the market and the price structure of the market. And that analysis gives us the ability then to determine whether the higher probability is still, as I perceived it, to the downside and increasing in possibilities, or whether it is decreasing and potentially the higher probability is becoming a move back to the upside. Well, today's trading was pretty dramatic in the fact that we had a gap down, which is suggestive of an impulsive move, and we have reached very important support level. Now, this is the spiders on a daily basis. And if you remember from previous briefings, I've discussed the fact that this potentially was a three-step counter-trend rotation where we could look for equality between legs 1 and 3, coming down to about the 426, 427 area in the spiders. But 430 being a very important key reference area because it is the low from back to here, and this area of rotation. The other possibility was the fact that this is just simply a rotational pattern, and we're going to test 430 and then rotate all the way back to the upside once again. It appears as of today that part of the possibilities or the probability assessment is becoming a lower probability, and the higher probability is the first one that this is a three-step counter trend rotation and we're going to trade through 430 and potentially down to the 427 area. The lower probability now, or the other probability now, is that we're not going to hold at 427. We're going to blow through 427. That is going to be very important to determine, and we have to basically look at tomorrow as being a significant key day in determining what the next greater degree time and price move is going to be. Now, you can see in the spiders that we gapped down. That's a sign of an impulsive move. We gapped right down and traded right into the 430 area, which is support. So while there is still a lower possibility that we'll see rotation all the way back up, the higher probability, based on the fact that this was an impulsive move, is certainly leading the probability assessment that potentially we're going to break through this level and seek lower levels of support. Volume continued to increase both yesterday and today, and breadth fell off pretty dramatically. Now you can see this is S&P 500 breadth, so there's only 500 shares in it. So out of today's trading, only 75 companies within the S&P 500 were trading higher today. The rest of them, 425, were trading lower. Look what happened with 52-week highs minus 52-week lows. It absolutely collapsed. So this is 52-week highs minus 52-week lows, being 640 more shares are trading lower as opposed to higher. on the NYSE. So basically, tomorrow is just going to be a very, very critical day. Now, we did reach a point of being oversold and potentially extremely oversold, so it would not surprise me to see some type of pause to work or some type of reaction off of this 430 area to work off the oversold condition. How that develops will be extremely important. Now, I did discuss the fact that this potentially was a very bearish pattern that I had seen previously in my trading experience, and that if that's the case, that we're looking at the potential for a very extremely impulsive move to the downside. Now, we could see another gap tomorrow, and we could see the market continue. If that pattern that I just discussed is becoming the higher probability, then we could see several days of gaps and see the market continue to run lower. Volume will be the key. Breadth will be the key, although we could even go lower on stronger breadth. But watching what happens tomorrow is going to be extremely important. Now, the same situation occurred in the Qs or in the NASDAQ. You can see the rotational pattern, or this is a 1, 2, 3 showing equality between 1 and 3 at 347. Or the third possibility, this is a very bearish pattern I've seen in the past. You can see it's similar to what we just looked at in the spiders, and that we could see an acceleration to the downside, which could test much lower support levels. Volume increased in the Qs, breadth collapsed in the Qs, and in the Russell, a little bit different pattern here. Now you can see this is the leg 1, 2, and 3 projects down to 175. But if this is a more impulsive pattern, if we're going to see extremely, I shouldn't say extremely, but if we're going to see substantially lower prices, then 175 will be traded through. Now, the other thing is, and I point this out periodically, this has the appearance of a head and shoulder top. So based on that, if the neckline is broken, then we can expect at least a move from the head down to the neckline in distance once the neckline is broken. I calculated that distance, this distance here, the neckline was broken right here. That would calculate or suggest the potential to trade down to 165 in the Russell. Volume increased, breadth fell off in the Russell. So we're at a point now where potentially we could see an acceleration of prices to the downside. Now, it's going to be important to see what happens in tomorrow's trading. We closed at the lows of the day in all of the indices. But if we get lower prices tomorrow and those prices are on stronger breadth, because we're at a point of being extremely oversold, as you can see, this is the NYSE, this is the NASDAQ, that would suggest the possibility of some type of rotation or some type of pause. So keep your eye on what happens important tomorrow in terms of market breadth. So looking for tomorrow, and what I'm going to be looking for is basically if we get lower prices, what is happening with market breadth? Is there a divergence? How big is that divergence? Is it going to have any impact on stopping the price slide? Are we closing below 430? And how far down are we closing below 430? Anything that would close below this 427 area and the spiders would suggest that this is the bearish day pattern I've recognized, and we're potentially going to see much lower prices. Now, keep in mind, markets run and pause in all degrees of time. So it does not suggest that we're going to see what we saw between yesterday and today. We could get a pause, another run, up another pause, another run, and another pause. So keep that in mind. What I will try to do is identify the possibility of pauses, and then we'll have to analyze those pauses to determine whether we've reached a support level and we're going to see some type of greater degree time and price rotation back up, or whether we're going to see a continuation of price move to the downside. But this is very, very interesting. Today's trading was just extremely interesting, and really now leaning the probabilities that potentially if we break support, if we break today's low and close below today's low, then we're looking at the possibility that this is going to be a very bearish situation and a very bearish day pattern. Have a great night, and tomorrow's going to be important, guys, and I will pick this back up in the tomorrow night's briefing.